What's up, guys? So here we are, mid-April 2023, and the market's really weird, right? So I just wanted to do a quick update and kind of educate you guys on some of the stuff that I'm learning. I call it a quick update, but it took me forever to put together this PowerPoint presentation that I'm gonna kind of breeze through and just hit you with some overviews on, and I'm gonna hit you with my opinion. So everything in here is strictly that. It's my opinion. It's backed by factual data with sources and charts and graphs and all that kind of fun stuff. So, if you know me, you know I dork out on this kind of stuff. And if you dork out on this, you're probably going to enjoy it too. If you don't dork out on this kind of stuff, you may not enjoy it. But, I'm talking to my friends across the country that are mortgage loan officers, and, applications are down right now. Nobody's really buying houses and interest rates are high and everybody's like, hey, what's going on? Is now a good time to buy a house? Should I wait until rates come down? What is the housing market going to do? Are we in a bubble? Is it going to crash? These are questions that, I talk about with my friends all the time. So here's some statistical, factual data I'm going to hit you guys with real quick. Let's, now keep in mind, this is my personal insight, right? This is not nothing official. This is just me talking here. So let me hit you with my overview. Overview is Q1 and Q2 of 2023 is just a really weird market as we're experiencing right now. 2023 will finish off strong. We're thinking that Q3 and Q4 is going to pick up, and it's going to be more in line with the numbers that we saw back in 2020. And I mean numbers of people buying houses, house prices, and everything in that sort of realm. Interest rates will come down. And these industry analysts are predicting, some people are saying as low as 4.5, some people are saying as high as 5.5, but it's going to be something within that range. When will that happen? Not really quite sure. I'll talk a little bit more about that here in a minute. Housing demand is still really strong. We've got some stats to prove that as well. We're having a massive shortage in inventory. People don't realize that. We are still, I think, like 7 months behind in inventory. We're at inventory shortages that we haven't seen since the 1970s, believe it or not. Although rates are still high, people are slowing down, we're still having a shortage. Okay. Then another a point that I'm going to make is the slightest shift in interest rates is going to lead us back to a buyer's frenzy, right? We're going to have people hit the market from all over the place. It's going to go, which is going to make things go back to a seller's market, right? Now, another thing you need to be aware of is millennials are about to start flooding the market. And then I'm going to finish up with this, especially as real estate professionals or somebody wanting to buy a house or somebody wanting to sell a house. Question is, are you prepared for what's going to come? They're saying that we're standing at the doorstep. Okay. We're standing at the doorstep of a boom like our industry has not seen in a long, long time. So the boom that is to come, probably the beginning of next year, Q1, Q2 next year, we're going to be back to full swing. All of us professionals that are kind of bored right now, and make sure you're tightening up your systems and you're getting everything in place. If you're looking to sell a house, make sure that you got your house where you want to sell it. And if you're wanting to buy a house, I'm telling people right now is the best time, and I'm backing that. So let's look at some positive projections. Okay. These are, according to the National Mortgage Bankers Association, they are projecting mortgage loan originations here, purchase loans. They're expecting this year, 2023, to equal out about what it was in 2020. Okay. And then 2024, we're expecting it to be more than it was in 2022, not quite as high as we were in 2021 with purchases, but we're still up there, right? And then 2025, we're expecting it to be about like it was in 2021. Okay. I think that's really cool. I think that's really positive, but this just goes to show you where people are buying houses. The demand is strong. Prices will continue to go up. Okay. And interest rates, let's talk about interest rates real quick, because this is another big driving factor. What's going on with the interest rates? So I'm going to hit you with this real quick. We're having a lack of demand in the mortgage-backed securities. The mortgage-backed securities are the things that investors buy that drive your mortgage rate. So the more investors are buying mortgage-backed securities, the stronger the market is for mortgage-backed securities, the lower the interest rates. Okay. Just think supply and demand. Where there's high supply, the prices are lower. When there's low supply, high demand, the prices go up, right? So what's going on right now is these investors, the people that buy our mortgage-backed securities, they're global investors, mainly from China, and they're from other countries. But what these people do is they invest money and they want good, long-term, safe and secure investments. Well, mortgages typically provide really good investments for investors because they're safe and secure. People are going to make their housing payment. They're about as secure as treasury bonds that you buy, like U.S. bonds. In fact, my opinion is they're more secure than bonds. But investors are currently buying 10-year bonds instead of mortgage-backed securities. And you want to know why? Because they know the rates are coming down, and that means people are going to pay off their mortgages and they're going to do a refinance. So therefore, all these investors who would normally be buying mortgage-backed securities, they're not fooling with the mortgages right now because they know they're not long-term. They know it's only a short-term window before the rates go back down. Everybody's going to refinance and their notes aren't going to be any good anymore. So they're the long-term investors. They're going to the treasury bonds. They're buying bonds from the U.S. government. Okay. They're not buying mortgage-backed securities. Therefore, now we're having a very low demand on mortgage-backed securities, which drives our rates up. Okay. They got to charge more money. So if you are looking for I got to throw this in there. If you're looking for good short-term investment, let me know. I'm doing capital raises for real estate projects. Okay. If you've got a lot of money you would like to invest, we can have that conversation. They are anticipating mortgage rates Q3 to Q4 to be in that 4.5 to 5.5% range. We will see. There may be one or two more rate hikes that take place before we see the rates come down, but that's what we're projecting. Okay. Now let's talk about 30-year average rates. Okay. If you look at this chart, which is really cool because it straight shows you the data on where our rates are right now. If you look at our interest rates currently, they're in line to what rates were in the early 2000s. In 2006, we had our big boom, and we're right there where we were back in 2006. I mean, we're right there right now. So although everybody's freaking out thinking rates are high, it's only because they were artificially low. Rates have not been below 5%. See this 5% mark? Rates have not been below 5% since 2010. The government has artificially lowered the interest rates since 2010. And we've had a very good run of very low rates, but it does, as we've seen, it does not produce a healthy market. A healthy market, 5.5 to 6.5% rates. Okay. So every area shaded in the gray that you're going to see on these next couple charts is when we had a big recession. So immediately following every single recession, historically, the rates have gone down. Recession, rates drop. Recession, rates drop. The 1990 dot-com boom, recession, rates drop. 2000, early 2008, 9-10 time frame, recession, rates drop. So just be expecting they're going to see another gray area right here on where we are today. We're entering into, this little short blip of recession like we saw here in 2020 when COVID first started. And just know the rates will come back down. These are the federal fund rates historically. Okay. So historically, we have recessions in these shady gray areas, and then boom, the feds come in and they drop the rates. And that's because the feds are reactionary. They try to control inflation, and inflation is numbers that's usually a month or two. By the time they get the numbers in, it's already a month or two behind. So usually the Fed lags, 2 to 4 months behind in their decisions. So right now they're trying to raise the rates to control inflation. So they say there's probably more to that story. But we're not going to get into all that right now. Mortgage applications. Okay, let's talk about mortgage application. This is a chart that shows you mortgage loan applications versus, I can do this. I think it's going to mess me up. I don't know if you can still see this or not, but mortgage loan applications versus interest rate. So you can see in the orange line, these are mortgage loan rates. So when the rates are low, the mortgage application pickup, which is shaded in the light blue. So interest rates drop here in 2020, 2021 to an all-time low, and then mortgage loan applications were spiking, right? Now rates are at a high, and then the mortgage loan applications are dropped. So what we're going to see is the rates should come back down and then the mortgage loan applications go back up. If you want a good indicator, man, on what's going on in the real estate market, track the mortgage loan application data. Just Google that in. Mortgagenewsdaily.com does a great job of providing this chart. That's where myself and a lot of industry professionals usually track that data. That tells you, the mortgage loan application data tells you if people are actually applying for houses, if they're actually wanting to buy a house. So if you track that, you're able to keep a good pulse on what the market's doing, and they keep that pretty darn accurate. Okay. Now let's talk about supply. This is a chart showing our supply data. Okay. They are saying that our market is short about 7,000 homes for sale nationally, and about 700,000 houses short to meet our demand. And we're about 900,000 homes for rent short. So we are short, both rental properties, homes, apartments, that kind of stuff, and, single family primary residences. Okay. This chart shows the median sales price, and it always goes up. So the key indicator is, since the 1960s, house prices have gone up. We saw a steep, sharp increase here. Now, recessions are the shaded areas. Even in recession, even after recession, as you see here, house prices have still gone up. What would it take for our house prices to dip down? If you look at the dips here, that was 2009 and 10. We had the foreclosure crisis, massive job loss, that kind of stuff. Still wasn't a big dip. We recovered relatively fast. By 2014, 2015, we were back at full swing. And then we saw 2020 prices just skyrocket. And that's an abnormal increase, but that increase was created when the Feds lowered the interest rates, right? So we saw a huge increase in house prices. So millennials, let's talk about millennials real quick. Millennials have a larger population than baby boomers. They will be flooding our market with demand. Industry study, I think it was Freddie Mac that put out a survey, 90% of millennials want to own a home. Okay. They have higher income than baby boomer generation as well. So these higher incomes, they're going to be able to afford bigger, nicer houses. Okay. One thing that you need to understand is millennials are overwhelmed with noise. Some millennials listen to the noise. I think it's a good thing that they're overwhelmed with noise. And I'll tell you why. It's because nowadays you realize you can't believe everything that you read online. So if you're a real estate professional, you've got millennials that are watching videos and getting educated, which I think is great, right? Like, yeah, more power to you, man. Go get all the education you can. But at the end of the day, when they're making the decisions, when they're making their buying decisions, they're not looking online to make their decision. They're looking for a trusted professional, somebody that was referred to them by their mother, by their father, by a good friend, and say, hey, Marshall really took care of me. I trust him, and you need to call him. Okay. Now they're still going to do their research. They're still going to go online to get educated, which is all great. But there is so much noise out there, man. I think you're starting to see marketing shifting for real estate agents. That's a whole nother topic. But I think, me personally, I don't even like watching YouTube videos anymore, because especially if I see one that's professionally done, that has all the editing and all the pauses, and that, man, these guys spend hours editing this video. And then you look at their channel and they've got hundreds of videos on there. And it's like, man, these guys are just putting out content just to put out content. It's probably not good. It's probably not deep, whatever. That's my opinion. So what do you do? Establish relationships, because millennials are going to trust you for life unless you screw them over, right? As with most people. The biggest thing is, don't believe everything that you hear, right? So there are a ton of positive articles by some typically conservative sources. I don't know if you can read this or not, but let me make this a little bit larger just for this video. you got Barron's and Wharton College and the Economist, which is like a super nerdy, dorky, deep dive read, and they're all saying millennial demand will help stoke the housing boom. Uh, Millennials will drive home prices up for years to come. So waiting on the housing market to crash, don't experts say here. So there's a lot of negative media sources out there, and just be careful what you listen to. The reality is that we're in a healthy market. The reality is we're just in a slight correction that's going to change. It's going to bounce back. The other reality is we've learned the government is so in control and the driver of the ship of our housing market. And, it's scary. And we people need to be taking back the power and not handing it over willingly to the government. So not going to go on my tirade there, but these are my opinions. I hope this helps you guys put things into perspective for you. And listen, I want your business. I need your business, and I want to help you as a mortgage broker. I'm going to find you the best deal possible and educate you and hold your hand through this process, and really be a beacon of light for you and a good solid resource. So feel free to reach out to me anytime, and we're here to help you.